This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on March 20th, 2015. Our time is 8:41 Mountain. Radio show runs on 630 CHED in Edmonton. If you ever miss a radio show, they are streaming on Harold's two websites. You can listen anytime you want, HESradio.com and rarecoloreddiamonds.com. And more importantly, we have a podcast too. And that can be put on your portable device, and you can listen to us anywhere you want to go. Type in The World Financial Report on Radio in iTunes. It will take you to our podcast. You can subscribe to it. The shows will come in every week. All the shows are there. You can listen at your leisure. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number to speak with him personally and privately, 1-800-432-1022, 1-800-432-1022. Harold's auction website is hsfineauctions.com. Our featured diamond of the week is a 2.42 carat, round, brilliant cut, fancy, vivid, yellow, internally flawless. This is a beautiful diamond, a museum piece. And it's interesting to note that it came out this week. One of the world's rarest diamonds is up for auction. A 77.77 carat yellow diamond, one of the world's rarest diamonds, up for auction in early April. And they're saying that it could sell for $7.5 million US. But Harold, I would encourage people to take a look at our featured diamond of the week at rarecoloreddiamonds.com. Click on Featured Diamond. You will see the picture of it in our free weekly newsletter and video of it online. Just a stunning diamond and a great investment piece in an era where, once again, in Sweden, they went more negative with interest rates. Of course, different countries have negative interest rates, and Sweden has lowered rates again, making their rates even more negative than they were before. So if you're in a bank account, you're paying them, they're not paying you. No wonder why hard assets, Harold, that's the place to be in the current times that we live in.
Better believe it, Randy. The negative interest rate scenario is just ridiculous. I mean, who's going to pay to keep their money sitting in the bank? It's a ridiculous thing, but it seems to be the norm now in Europe, and there's no doubt in my mind that it'll be coming here to North America also. So it was a strange week in the market today because, or this week actually, primarily because of the currency markets. The currency markets are very, very volatile. And basically what we saw this week was that gold continued to drop, which we anticipated that it would due to the strength of the U.S. dollar. Now, we did get to a point to where the U.S. dollar was pretty well at par at 1.00. However, there was resistance at that level, short term. There's no doubt that the U.S. dollar will remain strong for the shorter term, even intermediate term. And basically, we're looking that the U.S. dollar is down today by a full penny and is trading at 98.22. So there's a direct correlation between the U.S. dollar and gold. And on a day like today, where the U.S. dollar has been down, which is one of the only days it has been down, the gold market is up. Gold's up 11.10 today at 11.83. So two things happened this week. We hit a support level in gold at 11.40. And it didn't break below the 11.40 level, which I believe it will over the short term. And now the market is back up to 11.83. I think that you'll start to see that gold will start to resume its downturn next week. And again, what we want to see is that if gold will hold the 11.40 level, which I doubt that it will, I do anticipate further strength in the U.S. dollar. So at this point here, we do anticipate that gold will continue to fall. If it breaks 11.40, the next major level for support is 1100 and then 1,000 in the gold market. We're getting very close to the bottom of gold, and we do anticipate that gold will be a massive moving market on the upside again. However, at this point, we do anticipate it will go lower. On a day like today, it's just a proven situation that when the U.S. dollar is weak, gold will go up and vice versa, and today the U.S. dollar is down almost a full penny, and that's why gold's up $11. Same scenario with silver. Silver's up 54 cents at $16.75, but earlier in the week the market was actually in around the 1550 level. So again, you're getting a bit of a bounce up, but it's just a little bit of a dead cat bounce at this particular point. Got platinum up $13 at 1138. So actually gold is now stronger than platinum, and palladium's held in there very strong at 1180. It's up $13. What we've seen also this week is a very, very heavy downward turn in crude oil, which will continue over the shorter term. Now, today, as we're taping the show, crude oil is up at $1.30. It's at $45.26, but we did get down into the $43 level and actually $42 level earlier in the week. What we anticipate in crude is that crude will continue to fall on oversupplies, which will bring crude down to about the $35 level, about $10 lower than it is at this particular point. That will also continue to wreak havoc on the Canadian dollar, which is trading right now at basically about 74 cents. So we do anticipate that as the oil market goes lower, that will push the Canadian dollar lower. But again, I think that we could see possibly a 3, 4, maybe 5 cent lower level in the Canadian dollar, which will push the U.S. dollar that much stronger. So that's what's happening in the markets at this point. Now, what's going to happen in oil is that because oil prices are continuing to fall, it's going to drop other companies out of business, other oil companies, and that actually started to happen this week where a major U.S. energy company has filed for Chapter 11, filed for bankruptcy. That will be the norm because, again, if it costs in the $80 to $85 range to produce a barrel of oil, what we're going to see at this point is that oil will continue to fall, and that will put a lot of other companies out of business. With oil trading at $45 today and $42, $43 earlier in the week, and possibly $30 to $35 over the next month, that is going to wreak havoc on the oil-producing nations and the oil companies, and a lot of companies in Texas, I think, will actually go bankrupt. So we're going to see a lot of problems continuing in the oil industry, which again is going to push the Canadian dollar lower as oil prices continue to drop. So this is a situation, Randy, that is extreme. It's going to cause extreme volatility in the oil market, and it's going to hurt a lot of companies and a lot of smaller nations that cannot afford this tremendous drop in oil prices. Again, if it costs you $85 to produce oil and you can only sell it for $30 or $35 or $40, they're not going to be able to stay in business that much longer. So again, at this point, it's so important to be in assets that are not paper, because the paper markets are so easy to manipulate, and that's what's happening in oil. It's the paper oil that's dropping like the paper gold that's dropping. On the other hand, there's a shortage of physical gold, and that will persist. And again, those that own physical gold, I believe, are going to be the winners in this market. Because if you're leveraged in the gold market or in the silver market, it's these type of drops that are going to end up knocking you out of the marketplace and you losing all your money. What you need to do is own the physical commodity and have it in your own possession. And that's what we've always said to you, is that these markets will get volatile. And the reason that you want to own gold is not to trade it. You don't want to try to pick the tops and bottoms of the market. You want to own the market outright. And that's exactly what we're doing. Now, this week, we have gotten delivery of our first 4 kilo bars from our new gold mining business. And that will be available within the next month. We will start to be able to produce enough gold for our clients to be able to buy physical gold at spot price with no commissions. We promised you that this was going to happen, and it is just about to happen. We've gotten delivery of 4 kilo bars of pure gold from our mines in South Africa. We're just having them checked and all that with the government, and at that point, we will start to produce gold, and we will allow our Canadian and American clients to buy physical gold at spot price with no commissions. The only cost to you will be delivery, and that will be through a company like Brinks, so it'll be straight down the middle, meaning that if you buy gold at $1,000 and it goes to $1,001, you're in profit. We will not charge you a commission and we will sell you gold at spot price, and will turn out to be one of the great investments that you've ever made. So we're very excited about that. We've worked extremely hard to get an importer's license today. Is extremely difficult, with Homeland Security and the money laundering laws and everything like that. But again, it's pretty close to its completion. We're very excited about the gold that we received from our partners in South Africa. And again, there's nobody in the business that would be able to bring you spot gold with no commission, because they just don't have the type of sources that we have, and we formed into a partnership in South Africa with a gold mining company with a gold mine that was very, very close to my partner's father for many, many years. So again, we put up $10 million to make this happen, and it's going to turn out to be a phenomenal thing for our clients. And all of our clients that lost in gold because they leveraged it or they financed it or whatever they did, the fact is we will help you make your money back. And that's why we're going to bring you gold at spot price with no commissions, because we want to show you that you can make money in the gold market again.
You can speak with Harold at rarecoloreddiamonds.com or call 1-800-432-1022, 1-800-432-1022, or rarecoloreddiamonds.com. And keep in mind, our featured diamond of the week is a 2.42 carat, round, brilliant cut, fancy, vivid, yellow, internally flawless. See it at rarecoloreddiamonds.com, featured diamond of the week. If you would like to receive our free weekly newsletter, the companion to our radio show, connect with Harold. rarecoloreddiamonds.com, 1-800-432-1022. He will be happy to send it out to you by email free of charge. This is something you can go through on your tablet, smartphone, computer. You can do it in 5 minutes, be completely up to date, see the stories we're talking about. You can spend hours as well. This week in the newsletter, we have our charts of the week, quotes and quick hits. And we have a couple of interesting charts. In fact, according to the Bank of America, they think that the surging dollar is a sign that a colossal financial event is just around the corner. Also, HSBC, they believe that the rally in the U.S. dollar may be over based on what's happened in the past. Another chart we have, the American mystery story. Consumers in the United States are simply not spending. A great quote from John Embry this week from Sprout Asset Management. I would encourage people not to be discouraged here and instead buy extraordinarily cheap assets, such as physical gold and silver, in a world where paper assets are grossly overpriced. Some of the top stories. Bank of England director: Greece will not in any realistic scenario repay its debt. You can see that story in our newsletter. IMF considers Greece its most unhelpful client ever. Also, one of the reasons we saw chaos in the currency markets, the U.S. dollar dropped at 1.2 pennies. Canadian dollar was up 2 pennies during the week. The Fed met. They kept interest rates the same in the United States. Janet Yellen was speaking at the press conference afterwards and basically was very dovish, and that's one of the reasons we saw some big currency moves. Also, Swedish Central Bank cuts key rate further below zero. The bank cut its repo rate by 0.15% to negative 0.25%. So a quarter point negative, and that's right. You're paying them to store money, if you can believe that. A very strange story, to say the least. Harold touched on it. A major U.S. energy company has filed for bankruptcy. Quicksilver Resources filed for Chapter 11. We have a couple of interesting stories. Gary Lampier from the Edmonton Journal wrote a great article about oil this week. We have a link to it. And Joseph Schachter from the Calgary-based Maison Placements is quoted in the article. He actually goes on to think that we could see $70 oil by the fourth quarter. One of the interesting stories we have is from Ray Dalio, and he came out this week. It was on Business Insider, also Bloomberg. He said, "This is just like 1937, and the Fed could drive us into a new recession." He thinks the Fed will raise interest rates soon, but history tells us it may be too soon. In a note last week, Dalio, the founder of the hedge fund Bridgewater Associates, wrote, The economy today is eerily similar to that of 1937. The Fed raised rates 8 years after the '29 financial crisis, following accommodative monetary policy to boost the economy, and it still ended up being too soon. The Dow lost half of its value between 37 and 38. And Dalio wrote, if one agrees that either A, we are near the end of the developed country central bankers' ability to be effective in stimulating money and credit growth, or B, the dollar is the world's reserve currency and that the world needs easier rather than tighter monetary policies, then one would hope that the Fed would be very cautious about tightening. And he lists 6 market conditions around the 1929 financial crisis that mirrored the most recent one we had in 2008 and 7. One of them, debt limits reached at a bubble top, causing the economy and markets to peak. That happened in 29, happened in 2007. Number 2, interest rates hit zero amid depression. Happened in 31, happened in 2008. Number 3, money printing starts, kicking off a beautiful deleveraging. That happened in 33 and 2009. The stock market and risky assets rallied from 1933 to 36, and we've seen it from 2009 to 2014. The economy improves during a cyclical recovery from 33 to 36 and 2009 to 2014. And finally, the final one, 6, the central bank tightens, resulting in a reinforced downturn in 1935, and his question is, will it happen again in 2015 if they decide to tighten? And Harold, I would not disagree with his analysis. I think if the Fed is really caught here because they become the world central banker, and if they do tighten, we could see the ramifications around the world in a major way that potentially could cause another financial crisis.
You're 100% right, but I really don't see how the U.S. is really going to raise rates at this particular point. I just don't see it because, again, it's going to affect the stock market and the real estate market in such a huge way. And again, with these very sensitive markets, I just don't think they're on the right track at this point. I see that the U.S. dollar is going to remain strong, for quite a while at this point here. So that's why we believe that gold's going to go to $1,000 before it goes higher, unless something catastrophic happens in the world. And let's face it, there's enough geopolitical situations at this point that anything could happen. And then when the world gets into these type of financial debacles like we're in right now, it's not unusual for a war to break out. Russia would be the number one area that I would look at for that to happen. With the sanctions against Russia, and now it's what's happening again with Iran, I just think that there's enough situations in the geopolitical market that could really get the markets running. So again, we don't, where we do want to get the best price we can on the markets that we're buying as hedges against these situations happening, we also want to understand, why the governments think that they can do what they're doing and what the ramifications are going to be. In the 35 years I've been in business, I've seen a lot of things happen in the financial markets, but realistically what's happening now is unprecedented. Who would have ever thought in our lifetime that we would ever consider paying a bank to keep our money there? I mean, we've always received interest for it. Back, in the day, you used to get 10% return on your money. Now you're going to pay a full percentage to keep your money. I just don't see people doing that. And again, with the uncertainty in the banks and the fact that the banks never really recovered from 2008 and 9, again, it's just not a good bet. So I see a big change in the way that people are investing. The other thing in the United States right now, with cheap oil prices and what they're saying, a lot of people back to work, which we know is not true, or a lot of people are back to work, but they're getting underpaid for the jobs that they're doing. Nobody's spending any money. You're going to see the retail sales continue to drop and the economy in the U.S. to be suspicious. So, again, we don't buy a lot of things that are really going on, and we certainly don't believe what the government is telling us at this point, but there are enough geopolitical situations in the marketplace at this point that could send the markets turning very quickly. So, again, at this point, as we monitor it, and every minute that the markets are trading, we look at the relationship between gold and the U.S. dollar and oil and the Canadian dollar. And at this point, every indication is that the dollar will continue to strengthen. Once we break a par on the U.S. dollar, it could easily go to 102 or 103. That should be enough to push the gold market down to the level that we think it needs to be to for us to really be heavy buyers in that market. But again, that could change very, very quickly, and any geopolitical situation like a war breaking out with Russia, which I believe is going to happen, could send these markets skyrocketing. So we have to be very, very cautious about when we buy the gold market. But again, I think everything is going to coincide with our new deal in gold, which is really going to help our clients out tremendously.
In an era of, obviously, bail-ins where banks that are going to go bankrupt can take money from depositors, and even in an era where we have negative yields, we believe in hard assets. That includes gold, silver, and diamonds. Our featured diamond of the week is from rarecoloreddiamonds.com. It's a 2.42 carat, round, brilliant cut, fancy, vivid, yellow, internally flawless. See it at rarecoloreddiamonds.com. Featured diamond of the week. We'll talk more later in the show about diamonds and that 77.7 carat yellow diamond ring that's going to be sold at auction and this is coming up in April. One of the stories we touched on, and we have 2 minutes left in our first segment here. Last week, David Morgan was interviewed, and he's written a book about the debt bomb in the United States going to explode, and he believes it's going to happen in September 2015 of this year, obviously. Now, it's interesting to note, Lawrence Kotnikoff, he believes as well, he was interviewed by USA watchdog Greg Hunter, financial system will collapse, just a matter of when. And Kotnikoff, he recently testified at the U.S. Senate about the runaway U.S. budget. How bad, according to Kotnikoff? I told them that the real 2014 deficit was $5 trillion, not the $500 billion or $300 billion or whatever it was announced to be. Almost all the liabilities of the government are kept off the books by bogus accounting. The government is 58% underfinanced. Social Security, 33% underfinanced. So the entire government enterprise is in the worst financial shape than Social Security is, but they are both in terrible shape. So how much is America on the hook for in the future? Kotnikoff goes on to say, if you take all the expenditures that the government is expected to make as projected by the Congressional Budget Office, CBO, all the spending on defense, repairing the roads, paying the Supreme Court justices' salaries, Social Security, Medicare, Medicaid, welfare, everything, and take all those expenditures in the future and compare them to all the taxes that are projected to come in, the difference is $210 trillion. You heard right, $210 trillion. That's the fiscal gap. That's our true debt. Professor Kotnikoff goes on to say, it will collapse. It's just a matter of time. I can't say when, but all I can say is it will be too late. It's interesting to note, we had that quote from a British official saying that Greece cannot pay back his debt. Let's be honest, the United States can as well. They're in a position where they won't be able to. That's why we advocate hard assets, diamonds, gold, and silver as an insurance policy in your portfolio. Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. Going to come back and talk more about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on March 20th, 2015. Our time is 9:07 Mountain. Radio show runs on 6:30 CHED in Edmonton, Sunday afternoon at 3. And don't forget, the show is streaming. You can listen to us anytime on Harold's websites, rarecoloreddiamonds.com, HESradio.com. Harold has a third website, hsfineauctions.com. Check that out. And we do have a podcast through iTunes. Have iTunes on your portable device. We go anywhere you do. You can subscribe to the podcast. Type in The World Financial Report on Radio. You can find us right there. We're portable. We go anywhere you do. Our featured diamond of the week from rarecoloreddiamonds.com. A beautiful cut, a brilliant cut. I love the round, brilliant cut. It looks so good in jewelry, in a ring in particular. It's a 2.42 carat round, brilliant cut, vivid, and it's a fancy vivid, yellow, internally flawless. Take a look at this at the featured diamond at rarecoloreddiamonds.com. And as we touched on, Rare Colored Diamonds going to be featured at Sotheby's Hong Kong, the magnificent jewels and jadeite sale coming up in 2015, April 6th. And they're going to be bringing out some of the world's most beautiful diamonds. Among the lots are a 77.77 carat fancy vivid yellow diamond ring. The estimate on it, 6.8 to 7.5 million US. A 4.57 carat fancy vivid pink heart-shaped, and I love heart-shaped, diamonds and diamond ring mounted by Carvin French. The estimate on that, 6 to 7 million, and a pair of striking fancy intense purple-pink diamond pendant earrings. The estimate on that, 6 to 7 million. So we are in auction season, not only for Harold's website, hsfineauctions.com, but for Sotheby's and Christie's as well. And as we get into auction season, we will keep you up to date with the latest numbers. But Harold, our featured diamond, beautiful, a great investment piece. If you're looking to add to your portfolio, this would be a beauty. And I eagerly await April 6th to see how the fancy colored diamonds do at Sotheby's magnificent jewels and jadeite sale. It looks like they have some real winners there as well.
You bet. It's going to be very, very exciting. Now, the featured diamond, what makes that diamond so rare is several things, actually. Number one, that it's vivid yellow. So vivid yellow is the highest saturation color of yellow diamond. So the more saturation, the higher the value of any diamond, whether it's yellow or blue or whatever. But vivid is the highest saturation of color. And then there's 10 different levels of vivid. So that particular one on a scale from 1 to 10 is a 10. It's one of the most outrageous diamonds I've ever owned. So it's vivid in color. It's 2.5 carats, slightly over actually, which makes it ridiculously rare. I highly doubt that there's very few diamonds of that size and color available anywhere in the world. It's that rare. Then on top of that, it's round. And round is the rarest cut of any colored diamond. So you've got a very large size. It's over 2.5 carats. Only one diamond in 15 million is over 2 carats, and I can assure you, very, very few of them compared to this diamond. It's round, which is extremely rare. And then again, the color of it is a 10 out of 10. It's just absolutely spectacular. So you've got that it's a large size, it's the highest saturation of color, and it's also internally flawless. So that makes it an unbelievable diamond. And what we actually did is we put this into an amazing setting. So it's a real museum piece. Very, very few diamonds like this exist at all in the world, and a diamond like that is in the $250,000 range. It will do nothing but go up in value. A diamond like that could go up by 25% a year. So it's a very special diamond. We bring it to our clients as a featured diamond. Obviously, it's not for everybody because, again, a $250,000 diamond is not in a lot of people's price range, but for those that are, you've got a piece that, again, is extraordinary and will do nothing but make money over the coming years. So we're very, very excited about it. The diamond business in general is doing extremely well in the sense that the high-end colored diamonds are doing phenomenally well. As the world gets into currency wars and that type of thing, that's why people buy diamonds, because their currency markets are changing. Just think about what happened in Europe, with the euro just a month ago. It was sitting at 120, and now it's at 106. If you have your money in the euro, you lost about 30% of your money in one day. That's how fast that market went. Look what happened with the Canadian and American dollars this week. You saw a 2-cent difference in one day in the Canadian and American dollar. And those are extreme moves. They can change an awful lot in the financial markets in just a very short period of time. Let's look what happened with our Canadian clients. About a year ago, the dollar was even with the Canadian dollar and the U.S. dollar. Now it's down by almost 30%. That's how quickly your net worth can change just due to the currency markets. So the fact is that diamonds are one of the only assets that can be sold in different currencies, because we can hold auctions in different parts of the world that will sell these diamonds and be able to pick up that currency. But at this particular point, just looking at a change of 1 year of 25 or 30% in a currency, that means that our clients that bought diamonds when diamonds were at par picked up 25% on the currency alone just over the last year, let alone what the diamond would have gone up. So we've always said that to buy diamonds, to invest in colored diamonds, the major reason for doing it is because currency devaluation. We knew that this was happening. That's why we brought this asset to you. But it's going to get more and more extreme. And the fact is, the more extreme the markets get and the currency markets get, the more important the diamond market gets. Again, in 1 year, just on the currency alone, our client could have made 25% return on their money. Now, the fact is that we need to own diamonds for the longer term, not for the short term, because the situations that are happening to us at this point are longer term situations. So if you made the right move by buying diamonds and gold type of thing as a hedge against currency devaluation and upcoming inflation, you're in the right marketplace. You just got to sit back and let the market do its thing. You don't want to rush the market. You don't want to get out prematurely, and you don't want to take your hedge off the market. So the fact is that diamonds are a 10, 15, 20-year hold. I've mentioned many times on the show that my wife's girlfriend inherited a pink diamond from her grandmother, who bought the diamond 50 years ago. The diamond she bought 50 years ago was a 5-carat pink that she only paid $50,000 for. Today, that diamond is worth $5 million. That means it's gone up over 1,000% in that period of time. Actually, much more than that. So, again, that's the reason why you want to put your money into long-term diamonds. That's where most families hold a major part of their wealth. In fact, myself personally, almost all of my net worth is in diamonds and gold. That's where I feel I'm most comfortable. That's where I feel the market is going to, and that's where I put my money. Now, it's important to know that I'm a very, very conservative investor. I don't invest in the stocks. I don't take unnecessary risks, and nor do most of my clients. So the fact is that if we see that the U.S. dollar will remain strong over the next few years, and that is going to push gold to a level, but then you're going to start to see situations happen geopolitically that are going to start to push the gold market up. Then on top of that, what's happening in the United States is not very bullish. You know, the U.S. government tells us that unemployment is doing much, much better, that it's down to 5.6%. We all know that that's not true. We all know that unemployment for people that are out of the workforce is closer to 18 to 20%, and that is not conducive to a strong U.S. economy. In actual fact, the same thing is happening in Europe, because what's happening with Greece and Italy and Portugal and Spain and Germany and France. So it appears at this point that the whole world is going into a financial funk. And if that's going to be the norm, if that's what's going to happen for the next couple of years, you have to make certain that you have your investments in the proper order. You have to have your priorities straight, and you do not want to leverage, and you do not want anybody holding your assets. You want these in your possession. You don't want to leverage your gold or silver because of the volatility in the market. Because the fact is that when you leverage, like many people have done, which was against our instructions, you ended up losing your money. So the fact is, you want to be very, very conservative going into the upcoming times geopolitically and what's going to happen in the interest rate markets. My strongest recommendations are to hold physical gold and physical diamonds and get rid of anything that is leveraged, because that's only going to hurt you moving forward. The volatility that we're seeing in the currency markets, which was so obvious this week, and in the financial markets like commodities, you want to make certain that you are not leveraged during those particular times. Buy physical gold as a hedge against inflation. Buy physical diamonds as a hedge against currency devaluation, and we're not only going to come out of these markets doing well, we're going to do way better than most other investors that will end up losing their money in stocks and bonds and paper gold type of assets. So again, my strongest recommendation is to remain very conservative and don't speculate until we have a much clearer view of which way these markets are going to go.
Featured Diamond of the Week from rarecoloreddiamonds.com. A 2.42 carat, round, brilliant cut, fancy, vivid, yellow, internally flawless. See it at rarecoloreddiamonds.com and click on Featured Diamond of the Week to see the video. We have a picture of it in our free weekly newsletter. And when you talk about diamonds, some of the things to consider: privacy, portability, estate planning. You also have price stability and good long-term growth. As we have touched on in past shows, you have their value and rarity. It's recognized globally and can be sold in any currency, which is so important nowadays. The easiest, safest, and most discreet way to transport wealth in the world: real estate in your pocket. They are not directly tied to a global market, which obviously is a safeguard against market uncertainty. Less than 1% of all colored diamonds mined are considered investment grade, making them even rarer. Colored diamonds are the most concentrated form of wealth in the world. No new mines producing colored diamonds have been discovered. Colored diamond mines are shutting down without replacements, as we know is the case with the Argyle mine in Western Australia. 90 to 95% of the world's pinks will be gone. A hard asset that diversifies your portfolio securely and is not affected by volatile stock market movements, which are so important nowadays. Based on diminishing world supply, experts predicting dramatic price increases in the immediate future. Near term, long term. We can send a report out to you from Bain & Company. They have done a report saying that the Far East is going to drive the diamond market in a way that it has never done before. They're turning on to diamonds beyond gold and silver, and there are no new mines. Fancy colored diamonds have never decreased in the past 30 years. Those are some of the reasons that you want to take a look at rarecoloreddiamonds.com online. We have museum quality pieces, investment diamonds, featured diamond of the week at 2.42 carat, round, brilliant cut, fancy, vivid, yellow, internally flawless. And you can see, here we have Hong Kong Sotheby's Magnificent Jewels and Jadeite Sale, April the 6th, 77.77 carat fancy, vivid, yellow diamond ring, 6.8 to 7.5 million. Harold, it was rather interesting that the featured diamond this week, a yellow diamond as well, gives people an idea. This diamond that we're offering would very easily show up as a museum piece or in a major diamond auction at a Sotheby's or Christie's or hsfineauctions.com. This is a diamond that obviously you can wear. It's wealth, it's portable wealth, but it's something you can wear and walk into a room and be the center of attention as well. That's the beauty of investing in this diamond market.
Oh, you bet, Randy. And when you see that diamond in person, it will literally take your breath away. It has got such strong color. Just saw it the other day. It was absolutely amazing. We are doing a private showing at an $11 million home in Miami, right on Biscayne Bay, and it was phenomenal. 70 people showed up, and we showed magnificent diamonds, and there was bankers and financial people, and it was a phenomenal evening, and we sponsored it, but the response was just absolutely tremendous. And we had some diamonds there that defied description, both from my company, Diamante Atelier, and on top of that, we had some investment quality diamonds. We also had the people from Susan G. Komen there, and they were so well received. It was phenomenal. In fact, one big investor was very, very interested in a huge donation to that charity. So it turned out to be an amazing evening. And we're very excited about being able to continue to do those type of shows to where we show diamonds at these amazing events and tie it into a charity so we can give back a little bit also. But that happened actually Wednesday of this week and was one of the highlights of the month, actually, because we did very well, but more importantly, the charity's done well, and we got to show some beautiful diamonds to some very wealthy bankers that certainly see the opportunity in holding these type of assets. So again, the world is changing. That's something that bankers never really used to look at before, but now with the concern about the paper asset market markets and negative interest rates and that type of thing, they're looking at alternative assets. And when you look at the track record of certain diamonds, they're hard not to invest in because the returns are better than you're getting in most other assets. And again, what is the risk of owning a diamond? So again, we're very pleased that this is working out the way that it is. When we wrote the report 10 years ago on rare colored diamonds, the best kept secret, it was the best kept secret. Nobody knew about it. And now almost everybody's knowing about it. And again, when you look at the rare diamond market, it's a market that, again, is not suitable for most investors because they started around $20,000 going to the $40 to $50 million range. When you look at the United States, 75% of Americans don't have $10,000 to their name. So, again, when you're talking about a market like rare diamonds, you're talking about really the top 1% that could afford to invest in these type of assets. But there are assets, diamonds, like yellow flawless diamonds, that back in 1980 were $500 a carat. Today they're over $20,000. They go up by 15% a year no matter what the markets are doing. So, again, those are in a lot of people's price range. Those are the type of diamonds that I put away for my grandchildren over the years. And, again, in 20 years when my grandkids or your grandkids are ready to get out into the world and start all over again, or to start out in the world, they've got an asset that we could sell for a lot of money. You cannot say the same thing about stocks and bonds because nobody knows what the paper asset market's going to be like at that particular time. But owning a rare diamond, one that is so difficult to get and so rare, because let's face it, how many pink diamonds are left? The mine that produces the pink diamonds is going to close in 5 years. The Argonne mine, there won't be any more. That's probably the best investment diamond you could buy at this point, primarily because we know that the mine is going to close and the price of pink diamonds are skyrocketing at this time.
Take a look at our featured diamond of the week, a 2.42 carat, and it's a round, brilliant cut, fancy, vivid, yellow, internally flawless. Absolutely stunning. And we do have that report, Bain & Company, Diamonds, Timeless Gems in a Changing World. We can send that to you. Harold has been interviewed by Fox Business News, Bloomberg. We have those interviews, also the Jerry Bovino Show. But one thing that has really caught a lot of people's attention, it's a catalog for Harold's company, Diamante Atelier. It's the collection, 2014-2015. And this collection catalog has some of the most outstanding diamonds you will ever see in your life. It really is jaw-dropping when you go from page to page. You think you've seen the best, and then you flip the page and you see something better. I would really encourage you to take a look and have Harold send this catalog out to you. It's the Diamante Atelier Collection 2014-15. And if you're interested in jewelry, diamond jewelry, investment quality jewelry, take a look at that stunning, stunning diamond catalog because it has the best of the best. I believe in life that, it's great to hear what people say, but it's even better to watch what they do. And Harold has always been a person who walks his talk. It's interesting to know that the Irish finance minister, Michael Noonan, he sold his euro shares to invest in gold. And one of the reasons they believe is because of euro deflation. He invested gold on his own behalf, the Minister of Finance for Ireland. He had shares and he sold it to buy gold. And that was in a recent filing that that information came out. So here's a guy, Harold. Obviously, we advocate hard assets, gold, silver, diamonds. Here's the Irish finance minister selling stocks, buying gold. What does he know that we don't know? Very interesting.
You better believe it. You better believe it. Again, the world is changing so fast, Randy, and, the debt levels, nobody knows what they are, but people are starting to really understand that the world is such heavy debt that could never, ever be paid back. And the reason that I truly believe that we're not going to see a big rise in interest rates is because when you owe as much money as the U.S. does, as other countries do, in the trillions of dollars, 1% increase in the interest rate could bankrupt them. How in the world are they going to pay back the interest on these loans, let alone the principal, which is never going to happen? So, again, the world is changing. You really got to realize it. We all get frustrated at times and read the stories and see the manipulation and hear about the fines and everything like that. But the fact is that if you own the assets that you're investing in, you're not going to have to deal with that stuff. So that's exactly what we're saying. Let's remain conservative. Let's buy the right assets at the right price and sit back and wait for the market to come to us, because there's no doubt that with what's happening geopolitically and financially in the world, that we're in the right place at the right time. We just have to wait for it to happen.
Featured diamond of the week, a 2.42 carat, round, brilliant cut, fancy, vivid, yellow internally flawless. See it at our featured diamond of the week, rarecoloreddiamonds.com. You can see a picture of it in our free weekly newsletter as well. And I agree with John Embry. We had the quote off to the top of the show. I would encourage people not to be discouraged here and instead buy extraordinarily cheap assets such as physical gold and silver in a world where paper assets are grossly overpriced. And it's interesting to note Egon von Greyers came out and said, the three super bubbles that I just mentioned, dollars, stocks, and bonds, are all in the process of finishing a move. It's hard to say which one will fall first, but it's the fall of the dollar which will have the biggest impact on the world. The dollar isn't really strong. It's been falling for 50 years. The dollar, is currently showing some temporary strength, but that's only because it's the mirror image of every currency in the world. Gold is the best indicator of what is happening in currencies, and all currencies have fallen from 97 to 99% against gold in the last 100 years. In 2015, virtually every currency in the world has fallen against gold. One of the stories that we have not touched on, Harold, and we have about 4 minutes left here on our show today, is Apple came out with the Apple Watch. Now, the new Apple Watch, they're saying, could be a huge positive for gold. Apple, which called gold uniquely luxurious in its advertising, has a history of swaying consumer tastes. The U.S., U.K., and Italian demand for wearables made out of gold has been cut in half over the last decade, according to data from the World Gold Council. A shopper favors more white-colored metals such as silver and platinum. But Apple's status as the arbiter of cool means its new $10,000 gold watch and yellow iPhones and MacBooks may entice consumers to buy gold wearables and ornaments again. There still are a lot of people in the Far East, in India and China, that covet gold and wear gold all the time. But it's interesting to note, and Goldcore out of Ireland did an interesting commentary, Harold, that they really believe that Apple could be potentially in the future buying a lot of gold based on this watch and some of the other products that they have that gold will be going into. And it's an interesting side note in the much bigger gold picture today.
You're certainly right. And I think that the same thing is going to happen with silver. The fact is that we know for a fact that the American and the Canadian mints don't have enough gold and silver in order to mint gold and silver coins. So it's just ironic that you've got, in the paper markets, you've got a market that's trading lower. But in the cash market and in the physical market, there's no gold or silver available. So again, it's a very confusing situation, and eventually what's going to happen is that's going to work to our advantage, because we will be caught with a shortage in the gold market physically, and then when something like this happens with Apple, you're just going to see the prices skyrocket. So we still feel that the prices are being suppressed by the banks, but I don't think that that's going to happen for much longer. And we also know that there is, out of London, a investigation into these banks that have been manipulating the price of gold and silver, just like we saw with the currency markets, and we're hopefully going to see the same result.
One of the stories that came out last week, HSBC supposedly shutting down their gold vaults in England. Now, they're looking into it. Is it because they're out of gold? All the gold has been sold to the Far East? We'll have to investigate that further in the weeks to come. Don't forget, the most secure and profitable investment, millions of years in the making, rare-colored diamonds. Nature's art, private, portable, stable wealth. Speak with Harold today about starting your own diamond investment portfolio. Get a free copy of our weekly World Financial Report on Radio newsletter. check out rarecoloreddiamonds.com, rarecoloreddiamonds.com, or speak personally and privately with Harold at 1-800-432-1022. And Harold, thank you again for another outstanding show and your knowledge.
My pleasure, Randy. I want to wish everybody a very wonderful weekend and a very profitable day.
Speak with Harold. He'll be happy to speak with you at any time about our featured diamond. RareColoredDiamonds.com, featured diamond of the week, 2.42 carat, round, brilliant cut, fancy, vivid, yellow, internally flawless. Go take a look at it at RareColoredDiamonds.com, featured diamond of the week. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.